Holy flippin' smokes. Things are actually getting quite scary now. The pain in the markets just seem to continue day after day with no sign of relief. Everyone, it was definitely another bloody day on Wall Street. Now, I've been covering extensively on the channel how the Federal Reserve is wrong on inflation and when they lift interest rates, it's going to crash the markets. But people, there's something else behind this stock market crash that's going on right now. So in this video, I'm going to go over exactly why the stock market is falling, maybe some other reasons why it's not just the Federal Reserve, and what you and me need to do right now to prepare. So we've got a lot to cover, so let's not waste any time. Let's get straight into it. Okay, so first things first is this, everyone. IMF chief says Fed rate hike could throw cold water on the global recovery. Speaking at the Davos agenda Friday, she said an increase in US rates could have significant implications for countries with higher levels of dollar-denominated debt. And so the IMF is the International Monetary Fund. This is like the banker for the banks. And what this simply means is if the Federal Reserve lifts interest rates and the dollar strengthens against other weaker currencies, then that means all these poorer countries that have debts in US dollars, when their currency falls and the US dollar rises, they have to use more and more of their own currency to pay off the debt. But look what just happened to global debt. And this is going to cause a huge crisis. And I think this could be one of the many factors that is also spooking the markets right now since she came and spoke last night. Given risks such as rising inflation, the pandemic, and high debt levels, the IMF warned in December that global debt hit 226 trillion in 2020. That's right, in 2020, I'm sure it's much higher now. This is the largest one-year rise since World War II. The debt levels are getting beyond a joke, and soon we're going to be talking in the quadrillions. But the big issue this is causing is over the past 2 years, we've taken on huge amounts of debt. We've printed so much money just to try to get us back to normal. Countries didn't become more productive, they didn't become more innovative, the standard of living didn't increase, and we're now about to pay the consequences for taking on so much debt for decade after decade and never addressing the debt, and for all these governments being so irresponsible with the debt. And I guess 2020 and 2021 has showed that modern monetary theory doesn't work. And since the IMF spoke last night, let's have a look how the markets reacted. So people, look at this, the Dow Jones from intraday high to bottom of 1.65%. So the Dow Jones lost nearly 450 points today. The S&P 500 down 2.09% from its intraday high, and it's down 1.89% today. And it just keeps getting worse and worse for the Nasdaq. It has broken the 14,000 level and is down 2.7% today. And the Nasdaq is getting very close to entering in a bear market, down 14% from its all-time high. And we're seeing Bitcoin and cryptocurrency has finally fallen victim to this market sell-off. It is down 10% as of recording this, down to 38,000, and Ethereum's down a massive 14%, down to 2,700. We're seeing a bit of a sell-off in gold and silver as well, but it is not down as much. Gold just down 0.6% and silver down 1.7%. But something very interesting that's happening to the 10-year US Treasury is we're seeing a reversal. The other day it hit 1.9%, but since the stock market has started crashing, people are having a flight to safety to the 10-year US Treasury. They're selling stocks, going into bonds, and probably waiting for a good time to buy back in. And what the bond market is probably thinking is the Federal Reserve is going to U-turn on its rate hikes once the stock market starts selling off more and more. But again, going back to what I was saying at the start of the video, it is not just the Federal Reserve that is causing this sell-off. And really, when you think about it, how pathetically weak have the markets become? We haven't even lifted interest rates 1%, but just even the talk of maybe lifting interest rates by 1% is crashing the markets. Does this show the markets have good fundamentals? Does this show the markets are strong? No, this shows the markets are pathetically weak. And the only reason they've been going up and up and up over the past 10 years is because of the Federal Reserve. And over the past 10 years, the markets have become very complacent. The stock market price to earnings ratio has become crazy. And people were just saying, look, valuations don't matter. Just pay for these high growth stocks because they're going to be the future. Sounds very familiar like what they were saying in the dot-com bubble. So while the Federal Reserve is saying they're going to lift interest rates triggered this crash, what I think is making it worse right now is people are waking up to the fact by simply how overvalued the stock market is. And also what's happening right now is it's earnings season. And we've got results from companies and earnings aren't looking good. Just two examples, Netflix shares fell 20% on slower subscriber growth. Also, we saw the other day Goldman shares dropped 7% after earnings miss on surging expenses and equities trading slowdown. So what I think hedge funds and insiders are doing right now is they've woken up to the fact on how crazy this bubble has got. And this was really the most obvious bubble and the most obvious crash not many people saw coming, but it's something I've been warning extensively about on the channel for the past year now. And what's going to continue to happen is over the next year, there's no more stimulus. So companies' earnings aren't going to look as good compared to last year. And so simple stock market fundamentals, if companies don't hit earnings, you have to price in these lower earnings. And like I showed you in yesterday's video, the Schiller PE ratio is at 37. And every time the Schiller PE ratio has gone over 30, the stock market has fallen 20%. So really, this crash should only be getting started, everyone. But there's also another big indicator to show that the economy is weakening and companies are very worried. Myself, I work on YouTube, and what happens on YouTube is companies pay to put their advertisements on YouTube. Now, last year when companies' earnings were through the roof, when companies were making a lot of money, they were very confident, ad rates went up because companies have to bid to put their ads on your YouTube videos. But now what's happened in January, and normally there is a drop in January of say 10 to 15% because a lot of companies have spent their advertising budget in December the previous year. But not just on my channel, many YouTube channels, the ad rates are down 30 or 40%. Now me, I don't really do it for the money, I do it for the love of it, so I don't really care. But what this means is companies are scared. They're not spending huge amounts of money on advertising like they were doing last year. And what that tells me is they're thinking there's going to be a lot slower growth in 2021. Now, who makes up a huge weight in the index? These high flying tech stocks and Google. And Google makes a lot of money off advertisements. So I think Google's earnings may miss this quarter or the next quarter. And I made a video recently about Elon Musk warning that we are going to enter a recession. People asked him, when is this recession going to come? Trying to predict it is very hard, but he says his gut feeling is mid this year or no later than 2023. And while we have to take everything with a grain of salt that Elon Musk says, it's looking like this prediction is looking more and more likely by the day. You know what else is funny, everyone? Or what's maybe just a coincidence? Insiders were selling at record pace in December. Look at this, everyone. I made a video on this previously and tried to warn you. CEOs and insiders sold a record 69 billion of their stock in December. But maybe it was just a coincidence that they sold a record amount of their stocks in December right before this big market crash, everyone. And also, like I've been warning, is the stock market has already been crashing for months now, but it was mostly in the small and mid cap stocks. And what I said is the last line of defense for the stock market is these large cap stocks. Remember, the top 5 and top 10 companies make up a huge amount in the index. So once they fall, it brings down the whole index. And this is why many people that were maybe just investing in ETFs or the indexes, they may have thought the stock market was very strong. But when you looked at the small cap stocks or many individual companies, many of them were already in a bear market, or many of them already crashed 50% or more. So the signs were definitely there, everyone. But what you probably wanting to know is, okay, what does this mean for you and me, and is the worst over? Well, what this simply means is, everyone, we've still got a long way to go before the stock market comes back to fair value. And like I've been continuing to say, don't go in and just buy up all these baby 1 or 2% dips. Wait for the real dip, the big dip. And I ain't buying anytime soon. I want to see at least a 20% discount in the S&P 500 before I start dipping my toes in. What this next market crash will create is huge buying opportunities, and it will create huge amounts of wealth for people that are preparing right now, building cash on the sidelines. I'll do whatever you can do right now to try to find ways to make more money, because this could be the opportunity of the decade or maybe even your lifetime. So everyone, that was a quick update of what's causing this sell-off, why it's not just the Federal Reserve, but what do you think? Let me know. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you in the next video.